Hello friends, welcome back to the channel. Today we are going to talk about a very interesting and a very important topic, which is risks in personal finance, right? So I'm going to talk about what are some of the risks that people tend to miss and why it is important to think about risk before even thinking about creating wealth or generating returns from riskier products. So let's get started. And during the video, if you have any questions, please feel free to comment and ask. What exactly do we mean by risk in personal finance, right? Let us first think about that. So when it comes to personal finance, what happens is we are generally so busy in our day-to-day lives that we tend to forget about the risks that are applicable to us, that we carry with us on a daily basis, right? Take for example, you're driving on a road. There is a risk that you could meet with an accident, right? You are employed. There is a risk that you could go through a job loss, right? Then there is always a risk that we may fall sick and may not be able to work for a long time. So these are very small risks, but they carry some probability on a daily basis, and we continue to take these risks on a daily basis, right? And but we don't realize that we are actually taking these risks. So when you are when, say for example, you live with your family in your own house, but you have a home loan, right? So now you have to ensure that you are in a position to make the home loan payment for the next 20 years, because even if you don't pay the home loan for 2-3 months, what is going to happen is the bank is going to come to your house and ask you to vacate the house. They'll not even ask you, they'll kick you out of the house, right? So those are some of the challenges, right? So risk is very, so even though the risk could seem unlikely or improbable, but these could happen, and because even if it happens to one of us, we are going to suffer, right? So it is better to be prepared than to be sorry when it comes to such risks, right? So how do you prepare yourself for such risks, when you're thinking about your own personal finances? So I'm going to talk about what kind of protection and what kind of preparation that you need to do to ensure that these risks in personal finance are taken care of before you even think about taking creating long-term wealth, generating returns from markets, buying cryptocurrencies and stuff like that, right? These are the most important stuff that you must know, and you must apply to your life. You must start immediately, actually. Okay, so first thing is focusing on insurance, right? So for any risk, the best thing that you should come to your mind is how do I cover this risk? And mostly you can cover any risk is through insurance. So first thing is through insurance. So what kind of insurance becomes important and necessary in personal finance, right? Say if you have a business and you have a go down or a factory, so you maintain a stock of goods and you also have some machinery. So you will buy fire insurance to protect that, or theft insurance to protect your goods and machinery, right? So similarly in your life also, you have to think about what are the risks that are applicable to you on a day-to-day basis. First is hospitalization. Second could be a risk of meeting with an accident. Third could be risk of falling ill. Fourth could be risk of death. Fifth could be risk of your house catching fire, or or natural calamity. So these are some of the risks that we face on a day-to-day basis. So let us discuss one by one how to cover it. For health, it's very simple. Buy a health insurance. Don't depend on your employer's health insurance, for a simple reason that the moment you quit your job, you will not have that health insurance, and there is a very big likelihood that as you grow older, right, your likelihood of getting diagnosed with any sort of disease becomes more probable, and then what happens is you may become uninsurable. So it is always better to buy health insurance and term insurance at the earliest age possible, right? So if whenever you are young, you buy it today. That is best to do. But how much to cover to buy in health insurance? That is also very important. Ideally, you should focus on buying enough cover so that you can use this health insurance for the rest of your life. So what should you factor in this? You should factor in inflation, right? Because healthcare inflation is normal than higher inflation. So just factor in, say, 2 to 3% extra, and then consider, say, today average claim size is somewhere between 5 to 7 lakhs. So you can use that as a benchmark and buy a bigger insurance, health insurance. The only caveat here is that when you buy a health insurance, the premiums are not fixed. Okay, the premium in this year is 1, and it could be 1 plus X in the next year. It depends on two things. The health insurance companies make regular premium changes, revisions because of inflation, and secondly, there are premium brackets. So if you change your age, if your age changes a bracket, then your premium also increases. So this is about covering the risk of falling sick, right? So next is the risk of death. For the risk of death, it's a simple concept: buy a term insurance. Don't even bother about buying any other insurance. insurance product apart from term insurance, right? You will be sold n number of life insurance products with the promise of return of money or promise of some returns, but ideally you should keep your insurance and investment separate. Okay, always remember that insurance is a product to cover your risk, not to provide you return. Okay, it is an expenditure for you. Okay, so you are transferring your risk from yourself to the insurance company, so you only you need to pay for that cost, the cost of that transfer of risk. You should not be expecting for any sort of return of money. So life insurance is a heavily missold product in the industry. If anyone is trying to sell you a term insurance which is for example any insurance product which is guaranteeing you return of money of any sorts, don't take it. Okay, just say no to that. Buy a pure term insurance. Even when you are buying a term insurance, just ensure that the company from which you are buying has been in the industry and has experience of managing an insurance operation, and also you can compare the premiums and buy the cheapest cover, ideally, because term insurance has a very simple product. It's a commoditized product. The payment is done on death. That's it, right? Next is critical illness insurance and accident insurance. Accident insurance is something that you should buy when you are more likely to meet with an accident. Okay, if you are working from home and you live in your house and your supermarket is in the same lane, mostly you're not traveling too much, right? And if you have a car, then if you're traveling by car, then the likelihood of meeting with an accident is low. But if you're someone who is into adventure sports or who is into daily sort of physical activities, or you're riding bikes, two-wheelers, could be anything, right? So in those cases, your probability of meeting with an accident is high. So that's when you should have an accident cover. Critical illness, again, it's a bit expensive product. Firstly, you should focus on term insurance, health insurance, the accident, and then your critical illness. Critical illness, you could consider if your family has a history of critical illness, or if your health, if you think that you're not in a healthy condition and you think that you could be diagnosed with any sort of critical illness, then you should absolutely buy a critical illness policy as well. So this is all about insurances, right? You can also think about buying protecting your house if you from fire or natural calamities. That's also possible. You can buy those kind of insurance policies also. So this is all about insurance when it comes to risk and personal finance. Next is the having enough cash, right? So when it comes to investing, what we do is we start with investing in stock markets, dabbling in stocks, futures and options without even having a good cash cushion, right? So if you were to lose your job today, how will you pay your home EMIs, or how will you pay your school kids fees? That is something that you should absolutely think about, right? So that's why the bigger your responsibilities are in your life, the bigger your emergency fund or peace of mind fund corpus should be. It's very simple. So for example, if you have a home loan, if you have a car loan, if you have kids who are going to school, then you should absolutely consider having a very big emergency corpus before even considering investing your money in riskier investments like equity or real estate. Because for a simple reason, for example, you lost your job. Mostly job losses happen when during economic downturns, right? And when an economic downturn happens, the markets also tend to go down. So what's going to happen is the markets will be down and your investments will be down, and if you happen to lose your job, you will have to withdraw money at the levels at which market are, which is basically negative. You may not get what you invested for. That's why it becomes important that you have a cash cushion. So ensure that your cash cushion is as big as possible, right? There is no thumb rule as such for this. Maybe if you have lots of responsibilities, then you could have a cash cushion of 12 to 24 months worth of your expenses. If you don't have much responsibilities, you're an independent single person, then maybe 6 months is also enough, right? So this is something that you should think and deliberate about it, and then maybe take a call as to how much you should have. I have done a video on how to invest your emergency funds and where to park it for maximum returns. You should definitely look at that video and let me know if you have any questions. So basically, if you think about insurance and if you have ensured that you have a decent amount of cash cushion, then you are mostly sorted when it comes to your managing the risks in personal finance, right? So let me know if you have any questions. Please don't